Success in the stock market begins with understanding patterns. For those feeling uncertain about the market, the key lies in pattern recognition. Once you start identifying these patterns, fear naturally fades away. If you're unsure of what to do in the markets, or worse, relying on emotion to shape your beliefs about the outcome, it can feel unpredictable and overwhelming. However, by recognizing patterns from previous years, analyzing historical events, and coupling them with probabilities, you gain much needed clarity. The most critical step is to eliminate emotions from your decision-making process. Often what you hear or feel becomes the biggest obstacle to making sound, objective choices. Pattern recognition is the foundation of success in the stock market. It provides an objective, logical framework free from emotional bias. The more you focus on identifying patterns, the less room there is for uncertainty and fear. We move in cycles, and when you recognize a pattern, you stop reacting, you start anticipating. Losers react, leaders anticipate. Anticipation is power. Knowing the pattern and understanding the cycle is what makes someone a great trader or investor. However, what truly sets great traders apart is the next level, learning to effectively use those patterns. When you look at any chart or market, you begin to see opportunities, whether it's something great to invest in, something to short, or something to exit. Recognizing patterns is just a start. The real skill lies in leveraging them to make informed decisions. All the great investors and traders, Warren Buffett, Peter Lynch, and Jason Cohen, may have different philosophies in approaching to investing, but they all follow the same foundational patterns. The patterns that we look for is in four different phases. There's the accumulation phase, the growth phase, the distribution phase, and the declining phase. This is going through an index and figuring out how many stocks are in which of these phases, which gives us a weight of evidence of what's going on. We see we are more in a distribution phase this year, as the last 2 years we went from an accumulation phase to a growth phase. This distribution phase is where we're hovering at new time highs and not breaking to the new time highs on closes. There are also other factors of historical information, presidential election cycles, and what we feel is the rise of the commodities again, which will bring us into a declining phase. Think of it like 4 seasons in a year, and by understanding the patterns of these seasons, planting and farming becomes much easier. You don't plant seeds in the winter. You plant them in the spring to harvest the crops in the summer. The same principle applies to the stock market and investing. Think of it like season. Recognize the cycles of the stock market and understand its history to make a better decision. Hello, investors and traders. Let's continue with our bold statement and exciting outlook where we left off on our last video. Over the past month, we've been emphasizing that the incredible 2-year bull run is nearing its end. Times are changing, and if you're a long-term investor, one of the smartest moves you can make is to accumulate cash in the preparation for the inevitable market downturn. Another key area we're focusing on is the commodities market, with our top pick being natural gas. Why are we so high on natural gas? NVIDIA and the new wave of superchips powering artificial intelligence AI demand enormous amounts of energy. These energy-hungry supercomputers require a reliable source of power, and there's growing chatter in the industry that natural gas could be a significant beneficiary of this trend. Anything power-related, whether for data centers or AI infrastructure, is becoming a dominant theme in today's market. Natural gas has the potential to play a pivotal role in this ecosystem. Think of it as a technology sector commodity, the lifeblood for powering data centers and AI systems. Rumors and speculation are fueling this rally, and natural gas could very well emerge as the primary energy source for electricity generation in this new technology age. While many pundits on TV argue that the natural gas prices might fall to pro-energy policies under Trump, it's important not to overlook another aspect of his administration, a $500 million investment in artificial intelligence. That's a lot of energy demand. We will further dive in today the commodities market, and we are also very high on energy. As we have also said, usually when energy goes up, cryptocurrency goes down. If you're looking to buy this year, the energy sector, the commodity sector, looks to be the new Magnificent Seven. There are many supposed to do's on Wall Street that are really don'ts. For instance, the perceived necessity of reading the financial pages daily and watching and looking over business reports to stay in touch or the fundamentals of what's going on, developments in the economy and leading industries, or the belief that you need advice from a so-called Wall Street wonderkind, a YouTuber, a clad in a three-piece suit, talking to other wonderkinds. Usually the information that you get will be wrong. Usually the feelings you get of what's going to happen will be wrong. We've been touting commodities now for a month, and everyone on TV is saying energy prices won't go higher. Energy companies won't do well. Natural gas is not the place to be because President Trump will drill, driving down the prices. And just because you saw that America will invest $500 million into artificial intelligence doesn't mean artificial intelligence companies goes up today. Feeling emotion, looking for other people for advice, and not building your own system, these aren't the answers. And they certainly won't put profits in your pocket. Unfortunately, too many investors embrace these ideas as the keys to financial success. Buy low, sell high is a cliche, not a strategy. It blinds investors to the professional's approach of buying high and selling higher, which is the goal to do consistently. I am not selling you a newsletter. I'm not selling you affiliate marketing. I'm not telling you even to like and subscribe. I'm telling you to build your own system. I'm telling you to use historical information to tell you what's going to happen. How have I been so successful the last 3 years in this market on YouTube is because I am looking at patterns. I am looking at cycles. I'm looking at historical information and taking a probability. But this is my system, and you have to build your own system. Staying up to date with all the financial and economic news won't necessarily improve your portfolio either. In today's world of instant communication algorithm, financials markets often react to news long before you see it in the press. Moreover, the market prices are based on the future expectations, not current earnings. To be successful, you must learn to interpret the clues that the market actions provide. These videos will teach you how to uncover those clues and turn them into profits. Finally, relying on the advice of analysts, of Wall Street, of people on TV won't get you very far. Overwhelming evidence shows their advice is often no better than a random stock picks. Any type of buy recommendation is a must in Wall Street. You will get very few sell recommendations on Wall Street. Maybe you get a neutral rating from the big investment banking firms, but never a sell rating. In fact, a set of darts thrown at a stock page might yield better results and is certainly less expensive. Too many of these so-called experts spend their time talking to each other and attending luncheons hosted by Fortune 500 executives. The executives serve up chicken Kiev and stale information about their company's current performance, neither of which is fresh or useful. And if any analyst comes out with a sell recommendation, they will quickly be let go. The real market professionals, the specialists on the floors of the exchange, don't rely on these misguided approaches. Their decisions are driven by market action, not the news. While the others follow cliches and rack up losses, the pros are making consistent profit. Mr. and Mrs. Average Investor often claim they're just unlucky in the stock market, but luck has nothing to do with it. The problem is they're playing the game by the wrong set of rules. Until they learn their rules, the right set of rules for them, that will lead them to success. Their results remain poor unless they have their own rules. I am a technical analysis, historic, algorithmic, artificial intelligence investor and trader. But same thing with fundamentals, where they will raise up cash when their PE ratios are not good or their fundamentals are not good, or if something is overbought. What you need is a consistent method for properly learning pattern probabilities of succeeding. That's what it's all about. Winning. We reviewed patterns, cycles, and anticipation of patterns. And what we're seeing is what we saw in 2022, where commodities moved up. A lot today will be in comparison of what happened in 2022. And remember, if energy, natural gas goes up, cryptocurrency will go lower. We've also seen the same thing with a correction inside of the market. So we've been telling you for the last month, we are bullish on the commodities indexes. Now you can use many of the ETFs, the trusts, the futures, but it all to us revolves around the commodities. About 2 weeks ago, we told you about natural gases, but today we're going to look at the overall commodity index so we don't miss a thing. Remember, disclaimer, the information provided on our channel is for educational and informational purposes only and is not intended to be a substitute for professional financial advice. We went over the accumulation phase, growth phase, distribution phase, and declining phase. Now let's go back to 2022, where we took the GSG, which is a commodity index, and we see from October till June, it went from about 16 to 26. And if we look at December 2021 to about January 2022, the QQQs went lower. If you dive into the history of what was going on back then and the history of what's going on now, it's the same thing. Remember, Big Wall Street needs to put its money someplace. And with all this talk about technology, AI, and all this talk that commodities will go lower, we believe that is just emotion trying to hide what's going to happen. Remember, this is our opinion. We've been right for many years and always giving the overall market correct, but we could always be wrong also. Don't want to sell you anything. I'm just giving you my opinion. Let's start at the beginning. If you look at the commodity index itself, now you can take the GSG or any other, they all pretty much look the same. 1 month ago, we've been telling you what this commodity index will do. This is mostly driven on energy and natural gas, but you can see the price escalation in the recent month. We would do buying on pullbacks anywhere from 21 to 22, and we are really following the overall market of the commodity index. So we're going official, short-term bullish, intermediate-term bullish, and right now we're still long-term neutral. The majority of the commodity index, the majority of the features of the commodity index are in a growth phase. Not a roaring growth phase, but still really led by the energy. One of the energies that we're looking at is natural gas, and we've accumulated a position here with GSG. Let's go our investment philosophy when buying. Is the commodity in a bull market? Look at this chart here. Clearly, it has broken out into a bull market. If you break it down into the energy and the natural gas, they are leading the way this year in the top 3 sectors. So the next thing is that we need to do is we need to use oversold indicators to tell us when to get in. And just like we were buying on the pullbacks for Nvidia, for cryptocurrency, for the Magnificent Seven, now we're going to do the same thing for the commodities. Is this a cheap trick? Is this trying to buy on the bottom? Well, commodity sector is no way near the bottom anymore, and we got nowhere close to buying at the bottom. But we will buy on pullbacks, and we believe the commodity index will go up higher. We will prioritize uptrends. We're looking for commodities that are headed upward. 3 years ago, we were big on wheat. Wheat has not broken out yet, so we're not involved in it yet. Natural gas has broken out, energy has broken out, and those are the ones we're focusing on. We have a stop loss on everything, and we're maintaining consistency in our approach. Just like Warren Buffett is consistent on being a value investor, or whichever hedge fund has a consistent approach on how they invest. But even value investors, when things become overvalued, they round up cash. Insiders are selling, but they'll need a place to put their money. It does not make a difference for us if it's the DJP or the GSG. It's all the same to us. Commodities we feel are going up higher. As we told you, the breakout point for natural gas in the commodity index, we're going to do continuation buying during the advancing stage, particularly when the stock retraces back close to its moving average and consolidates. When the stock breaks out above the top of the resistance zones in this scenario, it is known as a continuation buy. While this type of buy offers high probabilities of rapid advancement, buy on the pullbacks. We're adhering to a defined plan. How do we know how to buy in the pullbacks? There are many overbought, oversold indicators. One of our unique overbought, oversold indicators is the PS stock RSI, and this is close to 2.30, which is okay for us to buy. If we go to the overbought, oversold, again, all these levels are close to 0, and this middle one is actually even better for us because it never reaches an oversold position, which is another sign that the commodity index is going up higher. We go to our CCI indicator, which have recently sold off, and what will be great if the CCI indicator comes close to 0 and bounces back upwards. This is a positive sign for the CCI indicator. We're looking for high probability investing, and no one's talking about the commodity index. No one's talking about natural gas and energy. They're all talking about Nvidia. But 2 years ago, when we were telling you to get in technology, nobody was talking about technology. The guard is changing. And for the intermediate term, what worked the last 2 years will not work now. Do not think we will always be bearish, because there will be a time when we turn bullish again. But when we turn bullish, probably you will think it's the end of the world. Remember, this is our system. You do not need to listen to me. You need to build a system of how you come up with your information, how you base outcomes with your system. Even if it's fundamental, technical, historical, computer driven, find your trading edge. We start with predicting the overall market, and the overall market of the commodity index looks positive. You know the catchphrase: study it, analyze it, adapt it. Peace.